Hi, and welcome to Metaconscious Leaders. My guest today is Barry Coates, founder and CEO of Mindful Money, a New Zealand charitable enterprise that aims to make money a force for good. Prior to founding Mindful Money, Barry held a number of senior leadership positions in global charities, including heading up policy development at the WWF in the UK, being a former Green Party MP in New Zealand, and CEO of Oxfam New Zealand. He is passionate about climate justice, sustainability, and social equity. So Barry, welcome to Metaconscious Leaders. I'm delighted you're here with us, and thank you for putting time aside.
Pleasure. It's great to see you, Greg.
Barry, I'm really interested in your work because you're active at the cutting edge of so much that happens in business, finance and investment. This is kind of where it starts and finishes. Or it's typically where it starts and finishes, or that's the perception of where it starts and finishes. But we know there's a lot more to it, but it's a crucial part of it. And so I'm fascinated in this conversation to understand, and others watching, to understand what your view is of what's happening at this cutting edge and what does the future hold? And what do you think, or how do you think leaders can be powerful forces for good in this regard? So if you'd like to say something about Mindful Money, and then perhaps I'd like to go back and say and discover a little bit more about your personal journey and how you've got to this point of doing this valuable work.
Yes, I'd be pleased to, Greg. And the kind of key thing for me is having been trained in business and finance and spent a fair bit of my early career in helping big companies as a strategy consultant and in doing public policy work. I had a kind of epiphany around the issue of sustainability. We can talk more about this, but the Earth Summit in 1992, which some of your listeners may recall, was then the biggest conference ever held, and it coined the term sustainable development in a policy sense and a public sense, and really spawned a way of thinking about the world that became both a challenge for business and a huge opportunity. And we're still working through that. And so for me, when I look at what's happening currently, I am, of course, fairly alarmed, but I also see an inexorable move over a long period of time where there has been a rise in consciousness around these kind of issues. And, really the cutting edge of the challenge is how do we take this into different realms of the economy, of finance, of society, where we can actually see tangible progress? Because there's been a lot of acceptance of these principles at an intellectual level or at a policy level or at a level of token support. But when it comes to the difficult trade-offs, when it comes to the decisions that you have to make, when it comes to those choices around saying, what am I actually going to do here? Am I going to follow this belief system that I have come to accept around sustainability, or will I stick with my traditional system? And we see that particularly in areas like finance, where traditionally finance hasn't dealt with issues of environment and sustainability and social equity. So that's kind of that's where these strands to me are coming together, and in a way the rather hostile policy context at the moment is actually just sharpening some of those dilemmas for many business leaders.
So Barry, how does Mindful Money work? What are the operations? Tell us a little bit about what you do.
Well, really unusual beast, Greg. So I used to live in the UK post Summit in 1992 and helped set up the first ethical investment network there, and have been involved in ethical investment for years, and went off and did other things. When I was no longer in Parliament in New Zealand, I decided that I wanted to go back to this issue. And it's partly because I used to do a lot of work on issues like fair trade. And I saw fair trade go from being an idea that people found appealing into something very tangible that they could make specific choices when they went to their supermarket shelves. And that propelled an absolutely massive growth. New Zealand sales of fair trade increased 100-fold over 5 years. I saw that the ethical investment space is at a similar inflection point. That its time has come where now there is sufficient evidence and support to say, why isn't everyone investing like this? Why doesn't everyone take their values into account when they make investment decisions? Why should they just look at financial returns and risk and not also bring in other parts of their life, their brain, their experience, their understanding into those decisions? And it's for so long we've been told that we have to section off our thinking when it comes to finance, that actually finance is just about risk and return, and actually where the money goes and the consequences of where the money goes is not relevant. And so that's the kind of healing that I'd love to see. I'd love to see people be far more holistic about it. And so I think actually we're at the time where there's now some crucial evidence that allows that to happen on a rapid trajectory. And so Mindful Money came out of that thinking, came out of the idea that the driving force for change would not be the financial institutions themselves, but would be consumers. That what the financial institutions may do is often adopt the rhetoric, adopt the frameworks, etc., but actually substantial and deep change will only come when the asset owners, particularly individual consumers, actually change what they want. And so Mindful Money was established in New Zealand as a starting point to offer transparency to New Zealand consumers and basically tell them what they're investing in. So we now are able to tell people for free, we're a charity, all of the companies that they invest in, both directly and indirectly through funds, in their portfolios of pension funds and other investment products, 900 products. And as you well know, some of those funds have 3, 4, 5,000 companies in. So we analyze the whole portfolio and we identify the particular investments that people may have concerns about. And those we establish through annual surveys. And those surveys of the New Zealand public ask the question, what do you want to avoid in your investments? And we take that as being the trigger point to feed that information back to consumers. And so consumers can look on our website and say, I've got this amount of investment in companies that have been found to violate human rights, or companies that practice animal cruelty, or companies that produce weapons, or fossil fuel companies, or companies that commit social harm like tobacco and gambling and pornography, etc. So we use those categories that the public are concerned about in order to feed that information back to the public. And we've had hundreds of thousands of people visit, and they use the research to make more informed and more ethical decisions about their investment.
Brilliant. And on the other side, I think you're lobbying, are you, the fund managers, trying to, with the research and with the evidence that you collect, hoping to bend their ear, trying to bend their ears and bring their attention to the benefits that
Absolutely.
they can of making different decisions. Is that right?
Yeah. So we do quite deep research in order to inform that, and it's a little bit different from most of the financial research that they have available to them. We typically look more at the ways that companies that they might invest in affect people in the environment. Most of the research that they see is how things happening in society and the environment affect the value of the company. And so we turn it around and say, actually, it's the impact on the world that is far more important. And that's important in the long term because companies that behave badly won't do well financially. And, many of your listeners may know that there's now a huge amount of evidence out there to say that investing ethically doesn't mean to say that you get lower returns. In fact, there's significant evidence to say that returns from ethical investment are as high or higher. So skew on the higher side compared to traditional investing, and risks tend to be lower because companies take into account the environment, social and governance risk. So when we do this, when we engage with fund managers, we often find a willingness to consider, but actually, again, when it comes to the tough decisions, such as I'm not going to invest at all in fossil fuels, they hesitate because their other framework, their financial framework, says that you should be diversified across all sectors of the economy. And so if you haven't got fossil fuels, then you won't track an index and you won't meet those goals. Whereas we're actually saying that markets don't work perfectly. Particularly, Wall Street doesn't do very well on understanding climate change, and so there are big market failures that happen. And so we were able to provide research to support a different way of looking at investment. And the other things, we do annual awards for best ethical pension fund, best ethical investment fund, best positive impact fund, best media reporting, best financial advice, etc., best climate action. Yeah. So
Yeah.
in a
How are
way,
you?
it's working collaboratively with fund managers, providing research, and occasionally where we have to, we go public with things that we consider to be particularly problematic.
Right. Because I'm curious also as to sometimes how are you received by people in industry and in finance, because I can imagine that you're providing valuable transparency to consumers, but on the other side I can imagine you are sometimes an unwelcome guest who's shining a light on something, but on many other occasions I suspect you're probably very welcome because you're providing information perhaps even the fund managers not aware of. Is that the case?
Really, I mean, in the early days when we did this analysis, as I said, we did look through review to show all the companies in a portfolio. And what we found was many fund managers engage external managers to manage parts of their portfolio. It might be global equities or something. So what we found when we did the full analysis of all of the companies in the main portfolio and then all the subsidiary portfolios is fund managers came to us and said, thank you for telling us. We never really looked closely at what the companies within these other portfolios actually did. And so in many ways, we've had, I think, a very beneficial effect on the finance industry. We've challenged, we've provided new information, we've added some new frameworks. We do have people who really don't accept and support what we do, but that's entirely understandable. We didn't do this in order to make friends. We did it because we wanted to change the way finance works. And we have a growing number of core fund managers, asset owners, financial advisors, people across the finance sector who we work collaboratively with and closely with, and we have some common aims. Things are definitely changing.
I can imagine you making a lot of friends as well as perhaps upsetting some people, but that's the nature of change, isn't it? I mean, that goes with the territory and
Particularly the
is to
nature
be
of
expected.
particularly the nature of transparency. When you put information out there, sometimes people want to shoot the messenger. And what we're saying is, sorry, you're invested in these companies that most of the public find pretty reprehensible. We're going to show this information. It's your choice to invest in them. Don't blame us for showing what your investments look like.
I was reading, I'm going to read a quote of yours, Barry, from an article that I think went in the Psychology Weekly or Psychology magazine. And you said, of all the ways we compartmentalize values in our lives, there's a special place for money. We behave very differently in communities and even as consumers than we do as investors of money. And I think this is as applicable to us as consumers as well as us in business.
Yeah. It is. It is. Consumers often defer to expert advice on finance and the way that they wouldn't necessarily in their consumption choices. And so they can be disempowered when it comes to financial information, particularly as a lot of that financial information is presented in a very authoritative and definitive way and by people who are experts. Certainly in New Zealand, I think UK, other countries, financial literacy is low amongst most of the public. People really find it hard to understand how pension schemes work or how investment schemes work and what these different investment terms mean. So, there is a process of sometimes deliberate disempowerment of consumers around this information. And we think that actually people should be told more information and given the context so that they can really understand it. But then on the financial institution side, we also have the same kind of issues of compartmentalizing. So it happens at the consumer level, happens at the industry level. And I think the combination of those makes the responsiveness of the finance sector to consumers to be far less immediate than in most consumer products. And most consumer products, if there's a real problem and people complain, it gets changed. And because people want to keep their customers, they want to keep their customers happy, they want to keep their brands. Those mechanisms don't work so easily in finance, and partly because it's a big deal for people to switch their funds. Actually, it's a lot easier than most people think, but it's a block for most people. So they don't respond as consumers by saying, okay, if I can't get what I want in this pension fund, I'll switch to another one. People are very reluctant to make those kind of changes. So that builds into a kind of a lack of responsiveness to consumer concerns from the industry.
And awareness seems to be a big part of it, because it strikes me that there are a lot of good people around. I mean, I do believe that we are fundamentally good. People are fundamentally good. But we're also very busy. We have many conflicting agendas, goals, objectives. And because we're busy and in a hurry, we tend to rely upon other people for certain bits of information, cut corners perhaps, conveniently turn a blind eye to certain things, don't ask too many questions in certain regards. And look, I don't exclude myself from this. And I think that awareness is really important. And you in Mindful Money are doing a really good job in this, which is shining a light in an area and making it easier for people to make a decision, as well as giving a little bit of a nudge to the investors to respond to the consumer pressure, which can be positive as opposed to either neutral or negative. That's good. I know I've seen somewhere that, the business of business is business. It's very much a hobby horse of mine, which is, I was talking to somebody recently, and they admitted to doing some pretty unscrupulous stuff. By the way, this person was a nice, generous, really nice guy, generous guy, and so forth. And after he had admitted it to me, he just shrugged his shoulder. He said, but, business is business.
It's a compartmentalization of people's minds around these issues. It's very deep. It happens in other parts of our lives. We often do a mind-body split. We think that our mind is different from our body, and we don't understand concepts of holistic health. We can behave in a certain way and it won't harm us, and we have to look holistically at our lives. But I think I've never quite seen the degree to which this operates since I've been doing work in the finance sector. It really is quite remarkable. We often show a cartoon, and the cartoon is of people clustered around a fire in a cave with a post-apocalyptic world. And there are sort of skyscrapers on the cave drawings, and this person in the cave in a tattered suit is saying, yes, we, things are tough now, but we lived through the golden age where we maximized shareholder value. And it was kind of like, you maximize shareholder value, but at what cost? That's the compartmentalization. That's how we end up with all sorts of things like climate change and a biodiversity crisis and growing inequality in the world, etc., because we compartmentalize these things.
So let's look at it from a business point of view then. You've got, on the one hand, risk, on the other hand, reward. Yeah, you can say very often the higher reward goes with, in terms of financial, goes with the less or the more damaging industries. But they've also got risk attached to it, reputational risk, for instance. You've also got this thing of the relationship between business and its host. So the host for any business is the society in which it exists. And some businesses, there can be a really good positive relationship between them and the host, them and the society. And that can function very well. But frankly, businesses can become a bit of a pest, and even more than that, they can become parasitic, can't they? And I wonder, you've got EDI and ESG coming into the mix here as well. Do you, when you're scanning and evaluating companies, do you scan them in any way and rate them, rank them according to those criteria?
We do. We use financial data, and we use the data that's provided by research data providers that provide information for the financial industry. They're called MSCI, Sustainalytics, ISS, and a range of others, S&P Global. They provide information. They often provide scores for information. The finance industry is highly driven by quantitative information, very quantitative data driven. And so we often find that some of these scores are undertaken at a fairly fine-grained level. And then through unclear algorithms, they are aggregated up to provide a single number. And so suddenly people in the investment world do their investment by that single number without actually understanding what's important underneath. And so what we find is, for example, companies like Philip Morris and ExxonMobil rate quite highly on these ESG scores because they provide nice reports and they look after their water conservation and they treat their employees well and so on. It doesn't matter that they're destroying people's health or destroying the planet. They have high scores, and so they get investment through that. And so we don't tend to use that. We tend to look at what's the strategic issue for the company, and we essentially put companies into categories based on either the net harm that they do or the net benefit they do to society. And we're very keen to not only give people a way to say, I want to avoid things that are contrary to my values. I want to avoid those issues that I find don't align with what I believe in. But at the same time, we do want people to invest in the things that they care about. And in New Zealand recently, some of the mainstream funds have started doing much more in terms of investing in social housing and renewable energy and clean technology and a whole range of investments that have positive social and environmental outcomes. And that's where it gets exciting because we're actually starting to see the capital flowing in different ways. And for us, when we came into Mindful Money, always the aim was not only to divert capital away from things that cause harm, but actually to channel more capital towards the things that we need for the climate transition, that we need for nature regeneration, etc. And so it's quite pleasing to see more funds starting to do that deliberately and looking at ways that they can stop damaging nature, for example, and start supporting regeneration. And there are still relatively few investment opportunities in the regeneration side, but they're starting to happen. And so that's the kind of change that we're seeing when investment has a willingness to flow into areas, then entrepreneurs and businesses will respond to the availability of capital, and we'll see a whole range of new opportunities spring up as is already happening. And you only have to look at the changeover over the past few years and the flow of investment into renewable energy to realize that actually markets do respond. And those changes have happened far faster than early modeling suggested around linear rates of change. The Rocky Mountain Institute, a great research institute, talks about S-curves. So that once change, particularly where change is driven by technology, markets, and relative costs, change goes onto an exponential curve and can happen very, very quickly. And that's the power of markets. And that's kind of where we draw hope on climate change, that actually we are seeing those inflection points where it's now far cheaper to generate electricity from solar than any other form of generation. And so we're going to see an even bigger flow of capital going into switching from fossil fuels into solar in particular.
And so what would you say is the case for investing ethically, Barry? Because you just mentioned there the value of investing in renewable energies. But then I hear lots of reports and media saying, no, it's all nonsense. And wind energy is much more expensive than people are owning up to and so forth. I see it out there in the media. Where is the evidence that says investing ethically gets you a good return?
There's been big meta studies done, studies of studies of studies. So there's a kind of, and that's kind of 20 years of data. And there's a huge pile of that evidence, and it's pretty clear that generally investing ethically, again, as I said, skews towards higher returns. Not always, of course, for any particular investment. This is on average over thousands of studies. And we track that stuff through our own work at Mindful Money, and so we see examples of that. But in terms of explaining it to the public, we often use the chart of the S&P 500 over the past 10 years. And the S&P 500 over the past 10 years has increased threefold. And we compare that to the oil and gas index, the US oil and gas index. And the US oil and gas index has over time diverged more and more from the S&P 500. So rather than a 300% increase over 10 years, there's been a 10% increase over 10 years in the oil and gas index. So people have this kind of idea, oh, well, oil and gas must be this fantastic investment. Actually, it's been the most shockingly bad investment. And investors who have had money in the fossil fuel companies have had a drag on their returns for the time that they have been invested. And so what we've seen is many of the funds that have excluded fossil fuels have done very well. Lots of cases. The New Zealand government pension fund did an analysis when they took fossil fuels out of their portfolio, and they catalogue hundreds of millions of dollars higher returns than if they had continued to invest in fossil fuels. And there are all sorts of cases like that. So the case is really strong for fossil fuels. Once you get to more diffuse ethical investment, it's tough. So tobacco, for example, the tobacco companies have had a terrible record, and their share prices are a low multiple of their revenue and profits. So you can see those effects there. So, and you can see it the other way as well. So when capital starts to flow into renewable energies, we see the share prices of those companies rise and the multiples rise, and they're able to have a lower cost of capital. They're able to then grow faster. So it becomes a self-fulfilling cycle. And so that's about ethical investing. So when you invest in the things that are attracting capital, at least partly because they are environmentally sound and socially equitable, then we see that becomes an increase in their share price because of the capital demands, as well as because the business is doing well. And on the converse side, we're seeing the same thing with fossil fuels. And the thing that really keeps me awake, and I think keeps most central bankers awake at night, is the amount of money in what's called stranded assets in the fossil fuel industry. And it actually dwarfs the assets at risk from the global financial crisis. And it's no wonder that central banks have sleepless nights about what happens when oil prices suddenly collapse and demand goes down. We've seen before, quite recently, what happens when oil prices went down during COVID, when there was a drop in demand, the oil price went negative. So shipping companies had to be paid for storing oil on the ships, and so we see that those prices can be very volatile. And I think that the risks of investment in some of those areas that are at high risk and environmentally damaging, those risks are really high. And so again, that's a case for saying, yes, invest ethically, and that's got two sides to it. Avoid things that do harm and invest in things that do good.
That brings us to Larry Fink. Fink, head of the world's largest Fund 8 management company. What was that, Barry?
BlackRock.
Larry, I read it. I read this in one of your articles that Larry Fink, who is head of one of the largest funds, put the question as being, it's not about. Sorry, Larry Fink. What did Larry Fink say on this?
He said it used to be the question of why would you ever invest ethically? But actually, you can earn good returns and you can do good. So the question should be, why not? And we would love to see his institution practicing exactly that. They're not perhaps the most responsive institution at the moment, probably partly because they're under severe political pressure in the United States from politicians, from right-wing politicians. But I think that what he says is exactly right. If you can feel good about your investments by investing ethically, if you can do good in the world through investing ethically, and you can earn good returns, in many cases higher than you would otherwise earn. The question is, why wouldn't you do this? I think it's a very valid question, and it's a question we often pose not only to members of the public but also to fund managers. We are still surprised at some of the decisions that fund managers make.
So I heard the other day that defense procurement agencies in the US have written to defense companies in Europe demanding to know whether or not they have any EDI policies. And if they have, they won't be chosen for any procurement process, for any purchases. Now, that could extend to ESG. It could extend to pressure on organizations to drill, baby, drill, rather than to invest in renewable energy, for instance. Do you see evidence of that? Where is that likely to happen? Is that going to stop because of political pressure, or will it just go underground because it's the right thing to do?
We see that pressure, particularly from states with Republican administrations. And a number of fund managers have been barred from investment contracts because they use environment, social governance management tools, or they pursue diversity, equity, inclusion policies. But I think it kind of misses the point. It's a culture war. It's not about is this a good investment strategy? Because a good investment strategy is to take account of risk. If your risk comes from environment, social, and governance factors, of course you take it into account. And so that the idea that somehow this would be woke, or somehow this would be a communist plot, or it's really hard to understand if you're not living in that context. And so for us, it's about good financial management. And the thing I really love is that certainly for most European fund managers, for most fund managers in other countries, they're staying strong on their good management, financial management practices, and not giving in to the culture wars. In a way, this is kind of, there is pressure in the United States. We really acknowledge that there is that pressure in the United States. We do see a number of institutions in the US backing off from their net zero targets, backing off from using ESG management in their investment. We think it's a real shame. We also hear from many of those managers is that they just don't publicly talk about it, but they do it anyway because it's part of their practice. Hopefully what we'll find over time is that good sense is restored, and there won't be that kind of political overlay to the financial sector, because it's not good for the financial sector, and it's not good for investors, and certainly it's not good for social and environmental issues.
So, Barry, you mentioned a little earlier about an epiphany or a moment of the special moment in the Earth Summit at Rio. Also saw somewhere that you're a practitioner in Vipassana meditation, and I think this is a practice that you still continue with, is it?
Yes. Yeah.
Because you could say something about that, because Metaconscious Leaders is really looking at not just at what we do and what's the wise thing to do and what's the right thing to do, but it's looking at the being as well. It's looking at the consciousness aspect of it, because as Einstein said, we can't solve a problem at the level of thinking that it was created. We need to rise to a different place where, instead of checkboxing a number of criteria that commonly happens in ESG, we actually do it with purpose. We do it with meaning for a reason that's bigger than checking the box. So I wonder if you could say a little bit about your personal experience and how meditation has perhaps, what impact it's had on you as a person, and how that's guided you in the work that you've done.
Yeah. I have often, always been interested in spiritual issues, and have followed different pathways. I came across Tibetan Buddhism when I was in my 30s, and started studying Tibetan Buddhism and practicing meditation. I not only found that it had huge benefits to me personally in making me a I think a more open and more compassionate person, but it also really helped my mind and the way I approach the world. Buddhisms often talk about how to cut through the network of distractions. For all of us, we are bombarded with so much information, so many demands, um, uh, so many touch points that we try to keep track of in our mind and crowd in our mind, that it's really difficult to be able to get beyond those and have any stillness and calmness that enables you to approach whatever's happening in your life, whether it's work or personal, to approach those things with space, to be able to say yes, those things are going on, but actually, here's the space for me to be able to think. It's been hugely important for me because it enables me to actually be able to cut through issues and say, what's the core? What's really important here? Uh, where is my center with regard to this issue? So it helped me through my career in lots of different ways. As an anecdote, I used to cricket. I was a very keen cricketer once upon a time, and I gave it up at a fairly early age. But I went back to it when I was a bit older and used to play cricket in the UK when I lived there with a team of Australians and New Zealanders. And it was about the time that I was discovering meditation, and I went very quickly from scoring 20s and 30s to scoring hundreds, centuries regularly. There was this thing about being able to have a calm mind and concentrate on a cricket ball that I'd never been able to do sufficiently in my life before that. So it's a silly anecdote, but it actually is something that I experience in my work and in my life.
I think sport is a very powerful metaphor for how we live life.
Indeed.
And I also how we do business. And there are many reflections. It makes complete sense to me, and the clarity that comes with meditation and an inward journey provides quite a powerful center from which to make clear, strong decisions. And when we have clarity, what we do and what we decide and the action that we take is much more effective. And also it's much more enjoyable as well,
Yeah.
because there tends to be less stress. I find there's less stress attached to a decision. I'm not kind of wondering whether it's the right one or the wrong one. No, I know it's the right one because I know where that center is, that center line that you talked about. Yeah. I know my center. Therefore, that is not right. That's not right. This is the right one. There may be consequences, but that's a different matter.
And
So thank you.
and the non-attachment that's taught in Buddhism is really important. Uh, we so much attach our thinking to how it affects me and how I am at the center of most of the ways that we think about things. And to be able to have a process of non-attachment and some detachment, to be able to look without getting hung up on the way it affects me, the ego, the emotions that arise out of a situation, and to be able to look clearly is really important. And it helps me hugely with organizational dynamics. That in terms of the way I manage organizations, being able to look in a non-evaluative way at a situation and to stay calm and focused is a wonderful way to start imbuing an organization with those values and those ways of working as well. And so I've enjoyed taking Buddhism into workplaces and also to be able to understand situations
How do you
much
do that?
better. Sorry.
How do you do that? How do you take Buddhism into workplaces?
I think often by modeling the situation, by creating space. In New Zealand, we have some lovely practices from Indigenous culture, from the Maori culture in New Zealand, about the way people are treated, about ceremony, about creating points of reflection. Around bringing the past into the present. So, some of those practices then can become part of an organization. In addition, there's uh, There's taking the time to treat people as human beings and to recognize who people are and what their aspirations are and what makes them fulfilled. So not dissimilar from good HR practice, but in a way, I think sort of giving it a sort of a Buddhist context helps me. I don't necessarily insist that others do meditation, but often that happens.
Thank you. That's a valuable insight. Thanks for sharing that. Thinking about wrapping up a little bit, Barry, and looking at the time, and I know you've got another meeting to get on with. Tell me, what drives you?
Yeah. That I referred to the time at the Earth Summit in 1992 as being formative in my life. And before then, I had been active on environmental issues and social justice issues. Um, and that was imbued in my life from a very early age, particularly from my father. But I didn't really have a way to integrate that into my life. And what happened to me was a significant enough kind of moment in my life happened, so that it said to me that actually, I can, I know the issues. I know the issues of poverty. I'd seen poverty in countries that I'd visited. I'd been in situations where I'd lived amongst people in poverty, but I hadn't really until then made it part of my life, including my career. I'd seen issues of environmental damage and deforestation, but again, those are things that I could try and kind of influence, but they weren't really part of my life. There was something to the side. And so that moment kind of was a moment where I wanted to make those things really a part of my life and for those to be like a kind of pole star in my life, and they have been, and so they still are, and they will be, and I'm not going to retire in a hurry because they will be for a long time to come. And while I can do things that are going to make a difference to having a planet that is safe to live in and is not subject to climate catastrophe, I will keep on doing what I'm doing and to maintain the biodiversity that I love and to take care of people, particularly those who are vulnerable. Those remain kind of really at the core of who I am. So I'll keep on doing it. Yeah.
And brilliant. And on behalf of all the rest of us, Barry, thank you. So tell me, are you optimistic for the future? How do you see the future for humanity in the natural world?
I think I talked about the exponential curves. I think climate change is the most serious strategic threat. I think we are just starting to get these tiny little glimpses of what chaotic weather and chaotic conditions are going to do to the world under climate change. And we have no idea yet what that's going to look like because it's not a linear curve. It doesn't happen so that you get a little bit more extreme weather, when you increase by a tenth of a percent of a degree. It is a non-linear response mechanism, and I think we're in for some pretty terrible time. And as formerly head of Oxfam, my concern is not for those of us who are safely ensconced in our little castles and able to defend ourselves and have some savings and social welfare system, but it's the people who are on the front lines in low-lying Pacific islands whose livelihoods are destroyed, whose houses keep on getting swept away, whose whole islands are now being inundated, people in low-lying areas in Bangladesh and other places around the world. We are in the middle of a catastrophe. It's not a future event. It's happening now to people around the world. And it's just not the people who are in the richer Western world. And I think we need to wake up to that. So, am I optimistic that things will suddenly change for the better for them? I'm sorry, I'm not. Am I optimistic that we will stave off the absolute worst catastrophe of the world being uninhabitable for human beings? I am. And from an unusual source, I'm normally not a technological kind of technology is going to solve all of our problems. But I really think on climate change, I referred to the exponential curve of um, the rise of investment and deployment of renewable energies is chasing an exponential curve in the rise of climate impacts. Whoever wins out of these exponential curves will determine our future. And so I think at the moment we still have good chances of being able to stave off the very worst of it. But I think we have a wild and dangerous future ahead of us for the next few decades. Certainly, policies from the White House don't exactly help.
Yeah, the objective set at the Rio conference, however many years ago, since that time, I think we've gone backwards, haven't we?
Yeah. Yep.
So,
We have.
and indeed, I think since the 90s, when I set up an environmental consultancy, I think we put more carbon into the atmosphere since then than was ever happened before that. So,
Absolutely.
yeah. So we've actually not only got to, we have all that to undo as well. The 1.5 degrees is already busted, isn't it? And the question now is, you know what? There seems to be a curious resignation in some places that, well, you know what? We've missed it. It's happened. We've broken through the 1.5%. So you know what? But there's still the 2%, the 2 degrees rather. There's still the 2 degrees and the 2.5 degrees.
Yeah. We don't know what that point is, Greg. We don't know where the tipping points are, so that we start losing a whole swath of Antarctic ice and suddenly sea level rise takes a real jump, or there are all these tipping points that we're just starting now to discover, and they may have already happened. They may happen tomorrow. It's not a question of is it 1.5 degrees or 2 degrees. We actually, if we want to reduce the risk of catastrophe, we have to peak and decline in our emissions very quickly.
Would you agree with this? When I came up with the idea for metaconscious leaders, I was in a kind of campaigning frame of mind. But the more time I've spent talking to people and preparing for this and looking for people to talk to, the more I have found really good people doing really good work. I hear people talking about an age of awakening. And another idea that I really love, which I think is true, which is that a change takes a long time to come about, certainly longer than you want it to. But when it happens quicker than you can imagine. So, we're in this time of awakening. There's a lot of really good stuff happening. And we've only got to reach a tipping point, at which point it becomes the mainstream. And at that point, what could possibly happen once we shift our consciousness to a higher level? And when that reaches a point of critical mass, that we can bring technology or behavior and all the other resources that we have to bear on these issues, then I think that really is something that I am optimistic about. Not to 1.5 degrees in terms of climate change. Yes, I agree with you. There is great suffering already happening. But I do feel that there is a lot of good stuff, a lot of good people, and there is a lot of will to make changes.
I agree with that, Greg, and particularly amongst the younger generation. When we do annual surveys of ethical investing, the difference between the baby boomer generation and the millennials is huge. That actually there's really, as you say, a new consciousness around these issues developing, and some fantastic young leaders emerging. Our generation will pass on, will bequeath a whole raft of problems to the next generations. But I do think that they are far better equipped than we ever were to deal with these problems and the problems yet to come.
Barry, thank you. Before you go, where can people find out a little bit more about you, about Mindful Money? And by the way, is it operational anywhere else other than New Zealand? Will you be going overseas with it, getting other people to model it elsewhere?
Good question, Craig. So Mindful Money is www.mindfulmoney, or one word, New Zealand. So that's where you can find out about us. We have looked around the world to see if there's any organization like Mindful Money that provides free information for investors to say, what are you investing in? It's a very, very basic question, and we haven't found anyone. So we are getting calls from people who say, why don't you set up in Australia, or why don't you set up in the UK? We wanted to get a solid foundation in New Zealand. We have that. We've had hundreds of thousands of New Zealanders visiting our website, using the free information, making their decisions on investing ethically. So we are looking at possibly doing that in the future. Not as Mindful Money, but we're looking for good partners and good people to work with internationally. So maybe somebody in your audience has good ideas for us around how we can do that.
That would be brilliant. I hope so. Barry, thank you so much for your time. Hugely appreciated. Be well.
My pleasure,
Go
Greg.
well.
Lovely to see you.
Thank you.